This week has gone from insane to absolute mayhem. China got slapped with 184% tariffs this week. And now, China is slapping back with 125% tariffs on the US. But the US isn't backing down.
He poked me in the eye. Captain Insano shows no mercy.
America will show no mercy here. Sometimes there's things that you have to do that you don't want to do.
He's up in those cheeks. Oh, he's really oh my God.
And these decisions are backing China into a corner, forcing them to dump US Treasuries, forcing them to dump the dollar to prop up the yuan, and forcing them to buy billions of dollars of their own stock market in order to prevent collapse. And fiscally, their situation doesn't look good either, with their debt to GDP being at 370%. But let me give you the real story. You may see stories about the dollar collapsing or the DXY going to 100. You may see stories about gold hitting all-time highs or the 10-year rates exploding. But the most important story in global markets actually dropped yesterday morning. The money printer is turning back on and no one is talking about it. I'm going to share the #1 story of how the US government just signaled that they're turning on the money printer. And you know what this means for markets and Bitcoin. This is Dante Cook for Bitcoin Simply. Let's go. Right now, everybody's looking at the 10-year and the 30-year rising, and they think that the entire market is collapsing. But Scott Besson actually has a different view.
There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down.
This is just normal deleveraging, getting leverage off of your books. But if you actually watch this entire interview that dropped on Fox yesterday, I dug deep and I found the #1 insight that says that the United States government is about to start printing money. Pay attention.
The other thing I can tell you is I'm giving a speech this morning at the American Bankers Association, and we're going to be talking about the substantial financial deregulation that's pushing forward. And Maria, if we think about President Trump's agenda, tariffs came first. Now we're going to get tax done. We are pushing for deregulation, and the deregulation, unfortunately, takes longer to kick in, but I tell you, when it does, it's going to be powerful. And part of the deregulation in the banking industry will be changing what's called the Supplementary Leverage Ratio, which will allow banks to buy more treasuries without a big capital charge. So, I would expect that we have created a new buyer for treasury securities, or a larger, more durable buyer.
Did you hear that part about the SLR? This is the United States government effectively unleashing shadow QE without having to print money from the Fed. What is the SLR? Well, it's a Supplementary Leverage Ratio, which means that for every $100 that a bank holds an asset, they have to hold 5% in their own equity, which means that if they hold a lot of treasuries, typically a risk-off asset, then they have to raise a bunch of extra capital in order to do that. But in times of crisis, the government always changes the rules. Like in March of 2020, when treasuries weren't counted against their SLR, or their leverage ratio. So how does this inject more liquidity into the markets? I made a little chart here for us to understand what's actually going on behind the scenes, because it's super important for you to know that the money printer is actually turning back on. #1, if the banks have the ability to buy treasuries, this keeps treasury yields low, which lowers borrowing rates across the entire economy. More business activity, more real estate starts, all of the above. #2, the Fed can then issue more reserves, and the banks aren't punished for holding more of them. #3, this gives banks more flexibility in their lending operations or their normal business, which spurs on more business economy and more investment. This reduces stress in the overall system, which allows them to not panic when markets crash and for there to be more stability in markets. Everybody would know the game is up if the Fed just dropped their rates or they started printing more money and injecting liquidity into the market. So this is a sly roundabout way to accomplish the same thing without actually showing your hand. And this is a massive source of liquidity in markets where foreign actors like China are dumping treasuries.
And whether or not China is dumping treasuries, is that what you see right now? Is China dumping treasuries to try to put pressure on this market?
Maria, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories, that the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah.
But here's the problem. Injections from an SLR requirement ratio being removed is just a band-aid to a much larger problem. When there's no more trust in a system that runs on trust, the United States government has to do the only thing that it can do in order to reserve its status: print more money.
To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
Central bankers like Christine Lagarde from the European Central Bank are already saying that they are ready and monitoring in order to interject and intervene into markets for price stability. That's always the same story. That always just means money printer go burr, and it looks like Bitcoin is already sniffing it out. Is China buying Bitcoin? Forget what's happening in the short term. Warren Buffett says nobody buys a farm based on whether it will rain next year. They're buying it for a 10 to 20 year investment. And that's exactly what you should be doing when you're buying Bitcoin, and why you shouldn't sell your Bitcoin in the short term. One of the ways that you can unlock liquidity in your Bitcoin without selling your Bitcoin is by working with our partner, Ledn, the leader in Bitcoin-backed loans. Since 2018, they've issued over $9 billion worth of loans and have over 1,000 five-star customer reviews. And that's because the process is so simple. You can fill out the entire loan application in less than 2 minutes, and typically your account is funded in less than 24 hours, 18 hours to be exact. And Ledn is one of the leaders in transparency in the digital lending market, as they were the first digital lender to do a proof of reserves. Rates to start borrowing against your Bitcoin start at 12.4%. And if I checked, that's much less than a credit card. Don't panic when the market panics, and never sell your Bitcoin. Go to learn.ledn.io/borrow to get started on your journey today. That's learn.ledn.io/borrow to get started on your journey today. One of the ways to maximize your Bitcoin holdings is by protecting your Bitcoin the right way. And you can do that by taking self-custody of your Bitcoin. You can learn how to take self-custody of your Bitcoin privately, safely, and securely by working with our partners at The Bitcoin Way. Members of their team will walk you through how do you not only buy Bitcoin properly and privately, but how to also remove your private keys from third-party exchanges. Don't get rug pulled in the next debacle. Bitcoin and self-custody is like an umbrella. It's better to have it and not need it than need it and not have it. Remove your Bitcoin today from exchanges the right way, with help from The Bitcoin Way. Schedule a free 30-minute consultation with their team by going to thebitcoinway.com/simplybitcoin. That's thebitcoinway.com/simplybitcoin. As the dollar weakens and seeks a place to be invested, Bitcoin is slowly but surely flipping the S&P 500, as it's actually now less volatile than the S&P 500. Jordy Visser believes that Bitcoin will be the second largest asset in the world, behind gold only at the end of this year. And that's because it's replacing the Mag 7 as the dominant tech investment of the 21st century.
This year, the first quarter, Bitcoin outperformed the Mag 7 by 7%. The Mag 7 underperformed Bitcoin the last 2 years by 24% and 32%. So that means in a bull market, Bitcoin outperformed the Magnificent 7. And so far this year, the Magnificent 7 have underperformed Bitcoin by 7%.
What's the only asset in the world not being impacted by tariffs? What's the only asset in the world not being weaponized against your enemies in global markets? That's Bitcoin.
One of the remarkable developments has been this, that at a time when there's concern across the globe, the general trade has been to trade into U.S. assets as a flight to safety. That's not happening now. The dollar is selling off this morning against a broad range of currencies. Yields have been elevated. Is it curious to you, and what is it telling you, that there is no obvious or traditional flight to safety in the current environment?
Yeah, I think your observation goes to the heart of the matter, and I always go back to fundamentals. Why do we have a trade deficit in America for decades? It's because this is just the math of economics. Investors around the world have viewed America as the best place to invest. And if that's true, we will have a trade deficit. And so now one of the ways that expresses itself is in lower yields across asset classes in America. So if the trade deficit's going to go down, it could be that investors are saying, okay, America no longer is the most attractive place in the world to invest. And then you would expect to see bond yields go up. Now, it also could be inflation, and that's why this matters a lot to the Fed. I'm not seeing evidence yet that long-run inflation expectations are climbing, and it's the Fed's job to make sure that that doesn't happen. But I would expect to see, if investors decide, hey, we want to invest elsewhere, all else equal, that ought to be pushing up.
The world is going to move from toxic treasuries to a more neutral reserve asset. Look at this chart of the dollar and tell me that this isn't volatile. Volatility isn't a problem for humans. We can handle volatility. Trust is the issue that we must solve in our global markets. And that's an issue that Bitcoin solves inherently in its code base. This is why Bitcoin becomes 7% of the capital stack globally.
Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%.
My long-term forecast is it's going to go to 13 million over 21 years.
13 million.
13 million. But what is it 5 years from now? You're in your 4-year calculus.
You know, it's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25, and at some point it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8%, because it's always going to be a more global, open, free capital market.
How is there stuff that's above your pay grade? You're worth billions. I mean, we can say that. It's above our pay grade, but who gets to decide if it's above your pay grade?
He might have been it's below his pay grade.
Right, exactly.
Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity, or a culture, right? So people think it's a risky thing. It's all about people wanting to not take risk. They don't want to guess whether Picasso's or real estate in New York or Nvidia stock will be higher in 10 years. They want to buy money. They want to buy 1/21 millionth of all the money in the world forever.
In a world of increased nationalism and reshoring everywhere across the world and decreased trust in currencies and markets, Bitcoin stands out as the clear winner and clear leader. Don't make it too complicated. Buy Bitcoin, ignore the noise. One of the ways that you can ignore the noise is by staying locked in on your Bitcoin education and growing your Bitcoin network. And one of the best ways you can do that is by coming to the largest Bitcoin conference of the year, down to the Bitcoin conference in Las Vegas from May 27th through May 29th. Hear from some of the best speakers in Bitcoin, interact with almost 30,000 people from all across the globe, and have a good time while doing it. Come hang out with the Simply crew and use the code SIMPLY for 10% off. That's SIMPLY for 10% off your tickets. Hope to see you there. This is Dante Cook with Bitcoin Simply. Happy stacking.